Hi, let's cover my Elliott Wave analysis on Bitcoin on the daily and the 1 hour time frame. And at the end of this video, I'll cover the probabilities as well. So starting on a daily time frame with the bullish scenario. I finished a three-wave corrective structure, after which we look for price to continue to the upside and take out the all-time high. The corrective structure displayed on my chart is a flat 3-wave A, 3-wave B, 5-wave C. Common target for wave C is this blue box, nicely respected, and after C you look for motive wave structures to the upside, where the most common motive wave is an impulse in a wave 1, 2, 3, 4, and 5. However, if we simplify Elliott waves, because of the mess here on the lower time frames, in general what you are looking for is this. So we have overlap in the beginning, those are your 1-2s in Elliott waves. Then you get your sharp move to the upside on increasing volume, that is your wave 3. And then eventually you're looking for price to slow down again, start overlapping on decreasing volume. Those are your wave 4s and your wave 5s, similar to what we had over here. Once you see this, you know you're looking to end a move to the upside and get a retracement. Now the invalidation at the moment for an impulse to the upside is 112.2k, and that is mainly because of the more detailed count on the lower time frames, where we count a bunch of 1-2s, and over here we're looking for the beginning of that wave 3, and you just don't want to move to that 0.618 here, which would invalidate a potential 4, after which we still look for higher prices in 5. So if price moves to the downside and touches 112.2k, the probabilities decrease for an impulse to the upside. And if that would happen, then your bullish count is going to change to a multi-1-2 like this, where you have a 1, a 2, a 1, a 2, and then a move to the upside, which means you want a 3-wave corrective structure to the downside in a larger 2, and then you want to see motive waves to the upside again. So 5 waves up, 3 wave down, and then continuation to the upside. Now the bearish scenario on a daily time frame is that we have a top here at the high at 126.3k, and this move to the downside is counted as either a wave A or a wave 1. You look for a 3-wave corrective structure in a B or 2 and continuation to the downside. Now that means that on the lower time frames we need to count this structure up as a corrective move. And there is 2 options that I have here on my chart, but at the moment both of these have lower probabilities as long as the bullish count is not invalidated. So the most bearish option is the one I have here, a WXY double zigzag, ABC in a W, flat in a wave X, and then another wave A, wave B, 1, 2, 3, 4, 5 in a wave C. So wave 5 ending here or ending soon, ending wave Y, and then eventually you go to the downside. In this scenario, you do want price to move down and touch that 0.618 in the bullish scenario, which invalidates wave 4s. So in this case, you do want to move down, touch 112.2k. That would be step 1. Step 2 is changing the overall structure here, and not just taking out this low, but preferably take this one out at 109.7. And of course, eventually you want this low to be taken, because after a WXY you look for price to eventually move down and take out the low. But step 1, before this gets highest probabilities, is moving down to at least 112.2k minimum. Now the other bearish option is at least having one more wave 4 and one more wave 5. So here we would have an expanding diagonal in a wave A, you have a wave B to the downside, a corrective structure, and then another wave 1, 2, 1, 2, 3, 4, 5, 3, 4, and a 5. So even though this is a bearish scenario, you're actually still looking for a range in a 4 and another leg up in a wave 5 to then finish wave C, and then you move towards the downside at a later stage. What you see on my chart right now is a summary of the different scenarios displayed into one graphic. And what the bulls are looking for is a bunch of 1-2s and therefore a bunch of wave 4s and wave 5s. The bears want to invalidate those wave 4s. So after a WXY, you want price to move to the downside and at least touch 112.2k to invalidate a potential 4 and a 5. That would be step 1. In an ABC to the upside, we look for another 4 and 5, but after wave C, you want price to move towards the downside, which means that you're going to invalidate a higher degree wave 4, because the bulls are looking for a couple 1-2s, 3, and a couple wave 4s and wave 5s. this wave 4 should not touch the 0.618. So for example, if I take a fib here from this low to wherever the high of wave C is going to be, let's take the high here of my line and drag it to the right, you don't want this retracement to then touch the 0.618. The bulls are then looking for another 4 and another 5, and maybe another 4 and 5 and another 4, 5, just a bunch of wave 4s and wave 5s to finish an impulse. If we then look at my levels, my favorite levels are the volume levels, which are the ones that you see here on my chart. Support at the low was found at the monthly naked point of control. Then over here we had support on the weekly point of control. Here the daily naked point of control was touched, so I can remove it from my chart. And these are some new levels here. So daily naked point of control, weekly naked point of control, bit of a bunch over here at 108. But you can see the levels here on my chart around a price. You can also see there's a bit of a pocket here around 121. That would be interesting resistance. But mind you, we are currently here at the double top. As you can see, we took the liquidity of the double top. But also if you flip this level here, there's not a lot going on over here. So the chances are high you're just going to fill this gap and likely move to 121. Minimum would be at least 119.7 because arguably this over here is your gap. But 121, of course, has some volume resistance. We have some levels above still at 124.8, 126. And then we have the time frame horizontals, including then the double top here on my chart, the white line. So here you can see if we put it together, then this is the bunch that you have. And then we have one order block, a 2-day order block. If I go to the 2-day time frame, and you can see over here, we have an order block. So that adds to the resistance in that particular area. Then we get to the news because we do have some news this week. So today there is some news. There is no time. Again, Wednesday, Thursday, and Friday. We also have some news as you can see here. So we'll see what the week brings. At least on Wednesday, we do have a time, 7 p.m., 7:30 p.m. Central European time. Be aware that at least in Europe here, we move to winter time. Right, so if you look at your agenda, make sure it's UTC +1 now, not UTC +2 to make sure your times are correct. And then we get to the probabilities. And the probabilities of this move to the upside and in general are bullish as long as you do not change the structure with this move to the upside and you're not invalidating a wave 4. There's not really a clear reason to think any different. If you are bearish, preferably you wait for wave 4 to be invalidated and price to change structure. In the previous content, I explained different opportunities at the low here with the bullish CVDs, with the weekly point of control here, and then later we had the daily naked point of control here. Like this is over here currently at resistance. This should not be a long area. As I explained over here, longs should have been taken at 105, 106, 109 when those areas of support are tested. Not at resistance where we are at the moment. Resistances are TP areas, meaning even if price would move to the downside here and touch that 618 at 112.2k, it should still be a profitable trade. However, if you would flip this area of resistance here with signs of strength and you move into the gap, probabilities are high to fill the gap, so that can be an opportunity. If price locally would move to the downside here in a 3-wave corrective structure to the daily naked point of control, it provides an opportunity to look for price to move back up and take out that high and then move into the gap. For the bears, what I would like to see is a move to the downside that invalidates the bullish scenario, then a move back up, which should be a 3-wave corrective structure into an area of resistance, opportunity for a short, and then look for a move towards the downside. The bearish option is a lower probability option at the moment, or the bearish scenarios have lower probabilities at the moment. You really want to wait for wave 4 to be invalidated, at least move to 112.2k. Change the structure would be next to move below 109 here, and eventually, of course, you want this low to be taken. You want to see a 5-wave move down, followed by a 3-wave corrective messy structure to the upside, and then you look for another leg to the downside. And the opportunity for shorts is then over here. So this is the video. Hopefully you found it helpful and valuable. On the left, you can see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.